Hello guys, welcome back to another exciting video. Welcome back to RALLYTOP Investing. Now in today's episode, we want to look at how to identify a high probability fair value gap. Now, if you go to your chart, you'll probably find tons of fair value gaps everywhere on your charts. Now, not all fair value gaps are created equal, and not all fair value gaps are high probability. That is why in this video, I want to teach you how to identify a high probability fair value gap. Now, first of all, you will need to ask, what exactly is fair value gap? Well, fair value gap is the coinage of ICT. Now, you can also call it imbalance in the market. So, fair value gap is essentially a gap in the market. Now, and I'm going to show you that before I make some other comments. Now, let's use this as candle number 1, candle number 2, and candle number 3. So your fair value gap is the price differential between two candles separated by this singular candle. And I'm going to explain that to you now by diagram. Now, look at the low of this candle number 1. As you can see, it's not touching the high of this candle number 3. Look at it. Let me mark it up for you to see. Look at that low. It's not touching the high of this candle number 3. Okay? This. As you can see, there is a gap there. Alright? It does not matter how tiny the gap is. A gap is a gap in the market. Now, the algorithm that drives the market does not like to see any gap in the market. The market is coded in such a way, or the algorithm is coded in such a way to ensure a balance always between the buyers and sellers in the market. So where either the seller or the buyer takes over the market exclusively, then it creates what is known as imbalance or fair value gap in the market. And the algorithm has a way of bringing price back to that point to close it up before price will continue in its intended direction. So that essentially or basically is a fair value gap. Okay, so now with that being said, now I want to say some other things here. When you get to your chart and you want to take any trade, ask yourself 3 important questions. Identify these 3 important things. Number 1, and which is the most important, is your order flow. Where is your unmitigated order flow? Ask yourself that question. Where is your unmitigated order flow? Now, when you have identified your order flow is more important than your order block. All right? Now, some people think that order block is everything in the smart money concept. No, the smart money, all right, follows order flow, not order block. I want you to understand that. And what is an order flow? Order flow is a set of candles that pushes up, all right, before the down move that leads to a break of structure. That's in the case of a bearish structure. Now, in the case of a bullish structure, it's a set of candles that come lower before they push up that leads to a break of structure. That's your order flow. I cannot explain that more than that. That's your order flow. It's as simple as that. So that's the first thing you need to look at when you want to take any action in the market. Where is your unmitigated order flow? Now, let me draw out that order flow now for you to see. This is the order flow that I mean. This is your order flow. This is a set of up candles before this very aggressive move down that leads to this break of structure. That's your order flow. That's the number 1 thing that you need to look out for. Unmitigated order flow. Number 2 is that where is your fair value gap within that order flow? A high probability fair value gap follows these 3 elements I'm telling you now. The first one is your order flow. Your high probability fair value gap must be inside of your order flow. That's number 1. Now, once you have identified your order flow, now identify a fair value gap, or it can be 2, 3 fair value gaps inside that order flow. All right? Now, that is very crucial. Just like here, I've identified this fair value gap here. All right? And it is within this order flow. All right. Now, number 3 element you need to look out for is that your fair value gap, for it to be a high probability fair value gap, it has to have a valid OB, either above it, depending on the direction of the market, or below it. Please, I want you to take note of this thing. Now, let me show you the valid OB here within this order flow. This is your OB in the market, guys. This one is your OB in the market. And as you can see, it has a fair value gap right under it. Okay? So this fair value gap becomes a high probability fair value gap because it is the psychology is that as price is coming back, all right, to fill up that gap, it will tap on your OB. That's the idea. It will tap on your OB. But sometimes price will come to react off of your order flow alone without necessarily going to tap on your either your OB or your fair value gap. All right? But we are talking about high probability fair value gap here. So your high probability fair value gap, where you can get it, is within your order flow, and it must have an OB either above it or below it. All right? Now, that's the first diagram. The second diagram, look at it. This one is an uptrend. Now, I've told you your fair value gap is the price differential between 2 candles. All right? Now, but first of all, let's talk about order flow. Your order flow, like I explained to you, is the last down candle here. I mean, set of candles before the push up that leads to break of structure. So that's your order flow. Why is it your order flow? Because price went up. After this down move, price went up to break this structure here. Can you see that? Now, after breaking that structure, that's your order flow. And order flow is more important than order block. All right? Now, after you have identified your order flow, unmitigated order flow for that matter, the next thing you need to do is to identify your fair value gap, because your fair value gap that is high probability must be inside of this your order flow. Now, as you can see here, you have one fair value gap here. Let me show that to you. As you can see, the high of that candle is not touching the low of this other candle. So there is a gap there in the market. All right? That's a gap in the market. Now, the next gap you will find is here. Look at this point here. All right? From this, let me show that to you. Let me first of all show you the OB here. A lot of us will think that this is the OB. This is not your valid OB. Now, take a look at what happened here. Let me first show you that OB before I show you the next fair value gap there. Now, take a look at this candle's low and this candle's high. Can you see? Take a look at it. This candle's wick now swept the liquidity that was resting below this previous candle's low. Can you see that? Now, when it swept that liquidity, this becomes your high probability OB or valid OB. This wick becomes your valid OB in the market. This one, this week, becomes your valid OB in the market. All right? Now, this is your fair value gap between this point where your OB started and all of this is your fair value gap in the market. It's a gap in the market. And price must come to fill up that gap. And in the process, we tap into your OB. All right? So it's as simple as that. Those 3 elements or concepts, you need to always consider it very seriously when you want to take action in the market. Okay, let me just quickly show you 1 or 2 examples. I don't intend to make this video long. So let me just quickly show you 1 or 2 examples. All right, let's just look at, for instance, let's look at this one here. I'm just taking a random, you may say it's cherry picking. No, you can try it on any instrument and you'll find out that it is exactly what I'm telling you now. All right, now take a look. This is, okay, this low came here and this price went up to take out this high. Now, this is your order flow here. I said the first thing is to get to know unmitigated order flow. All right, but before then, let's use the replay tool and let me show you that unmitigated order flow. Okay, So this is an order flow in the market, like I told you. All right, that's your order flow. Now let's mark that order flow. Your order flow from here to this point is your order flow. Okay, now we don't know whether price will come back to it, but that's your order flow. All right, now within this order flow, I want you to look at something here, guys. Look at something within this your order flow. Take a look at something. Look at this candle came down and the next candle went up to take out the high of this previous candle. Very important. So that this candle becomes your OB in the market. All right, it becomes your OB in the market. Remember, first of all, we mark the order flow. All right, unmitigated order flow, and then we have this OB here. But if you look at this candle, which is your OB, your original OB is this blue candle. Now, but if you look at it, it's already mitigated by this candle. By this candle, it's already mitigated, and therefore you can transfer that your OB to the next candle. All right, that is how to do it. But first of all, where is your fair value gap in the market? Let me show you that one first. Your fair value gap, very important. Now, as you can see, the low of this candle, all right, is not touching the high of this other candle. As you can see, it's not touching the high of that candle. Can you see that? So that's your fair value gap. There is a gap there in the market which must be filled, all right, before price can continue anywhere. It has to be filled. All right, look at it. There is a gap. Now, so we have identified our order flow, we have identified the gap in the market, and where is our OB? Like I told you, our OB will be transferred from this candle to this next candle. So we can now mark this candle as our OB. All right, that's your OB. And remember, your OB now must be either above or below your fair value gap. And in this case, because we are bearish, so it has to be above your fair value gap. This is your fair value gap, this is your OB. And so we want to see whether price will go back and react off of it. Now, remember one more thing. Now, price can react off of either your order flow or your fair value gap or your OB. All right? So let's play price and see. Now, look at what happened there. Price has tapped into our order flow, now tapped into the fair value gap and the OB, and then drop. Can you see that? That's how to identify a high probability fair value gap. That's how to identify. If you can see, there was fair value gap here, but I didn't mark that one. I didn't mark it because it is not within the order flow. It has to be within the order flow. So that's the first thing we need to understand. Okay? Now, let's see another example. I told you I want to show you one or two examples. Now, let's see this one. Let me play price from here for you to see what I'm talking about. Let's do it from here. Okay, so now this is another gap. All right, already there is a gap here. This one, there is already a gap here, and price went and filled it up. Now, but where is your order flow here? That's very key. The first thing is to get your unmitigated order flow. Your order flow is from here, all right, to this point. Where is your order flow? Just a minute. Your order flow is from here. Take a look. From this point to this point is your order flow. Okay, that's your order flow in the market. Now, when you have marked your order flow, where is your fair value gap here? Well, your fair value gap will be here. Look at it from this point. Because we are going to mark an OB here now. Look at your fair value gap from here, this point. From where this candle, all right, from where it started. So that there is a gap in between this one and this one. Look at it. So this is the gap that you have in the market. Okay, that's the gap. As you can see, this candle opening is not touching this one. Why do I mark it as a gap, as a fair value gap? Because there is an OB here, a very high probability OB. Look at it. This candle's wick took out this previous candle's high. What do you call that? That is liquidity sweep. It swept the liquidity there, and therefore this wick, this candle wick, becomes a high probability OB here. Can you see that? This is a high probability OB that is above this your fair value gap here, and therefore if price comes to tap, it can either tap on this order flow, or tap on your fair value gap, or tap on your OB and then drop. But essentially what we are talking about is that the fair value gap within your order flow, and which has a valid OB either above or below, is a high probability fair value gap. All right, so we can play price and see how price reacts. Now, as you can see, once price broke out, price went back up, tap on this our order flow, tap on the fair value gap, and tap on the OB and drop. Can you see that? So that is second example of our second example. Now let me show you some more examples so that you can understand that we are not just making up anything. We're not just making up anything. Now the next order flow, let's look at this order flow here. Let's look at this one. This is your order flow in the market. Okay, where is it? Okay, these are equal lows. All right, so we can use this as our next order flow. This is our next order flow before the drop. All right, and as you can see, that's our order flow in the market. Okay, please take note of that. Now, but within this order flow, where is our fair value gap? Think about it. Where is fair value gap here? Everything is mitigated here. Everything is mitigated. There is no fair value gap here. Everything is mitigated. Now, the only one you have as a fair value gap is this one here. And that is key for you to understand. Please understand this one. Let me let me do something here. Let's use the replay tool here first, so that we can understand what we're doing in the market, so that it don't seem as if we are just cooking up stories. Now, your fair value gap here, even though it came out of that, it came out of your order flow, unmitigated order flow, but look at it. All right, take a look at that. That low is not touching this high. It's not touching the high of this other candle, this one. I've told you it doesn't matter how tiny the gap is. A gap is a gap in the market, and price will have to come and react off of it. Okay, so that is a fair value gap. Even though slightly it came out of this order flow, but that's a fair value gap. Why is that a high probability fair value gap? There is an OB above it. Look at this OB. This candle's wick took out the high of this previous candle, so this becomes your high probability OB, as you can see. Okay, that's your OB. So there is a fair value gap, there is an OB, another. So let's play price and see whether it reacted off of it. Now, as you can see, it reacted off of that fair value gap. All right, enter into our OB and drop. Can you see that? So this is the way you identify high probability fair value gap. Okay guys, that is all about this video. I hope you had value in this video, and if you did, please give us your like, and don't forget to subscribe and turn on the notification so that anytime we publish a new video, you'll be notified about it. But more importantly guys, please give us your like. Just hit the thumbs up button and give us your like, so that YouTube algorithm will be able to push this video out so that more people can see it and also gain this type of knowledge. Okay, and if you have any questions, please drop it in the comments section and we'll do justice to your question. We'll answer you. All right, do that and tell us the next video you want to see us do. Okay guys, I see you in our next episode.